Hi, I hope you are all doing well. As I told you in my first video that my background is in finance. I created this channel to share practical learnings with you to give you more value. In this lesson, we will explore the chart of accounts. By the end, you will understand why every business needs one. It helps organize financial information. So let's get started. Let's begin. A chart of accounts is a structured list of accounts. It has assets, liabilities, equity, revenues, and expenses. These form the backbone of every accounting system. Let's start with assets. These are resources expected to provide future benefits. You can see some common examples. They help to operate and generate value. Now let's move to liabilities. These are obligations a business owes, such as accounts payable or bank loans. Liabilities represent what the business owes to suppliers, creditors, or banks. Now let's understand equity. Equity equals assets minus liabilities. Example includes owner's capital. This is the owner's claim on the business. Next is revenues. Revenue is the income from normal activities. Example includes sales and service revenues. It increases profitability. More the revenues, more the profit. Let's understand expenses. These are costs incurred to create, operate, and generate revenues. For example, rent, salary, and marketing. Lesser the expenses, more the profit. Excellent. Let's do a quick revision. So assets are what business owns. Liabilities are what business owes. Equity is the owner's share. Revenue is the income from the normal business activities. Expenses are costs incurred to create, operate, and generate revenues. Keep practicing these concepts. Now let's quickly learn how these components are recorded with their normal balance and how these are recorded when these are increasing or decreasing. So assets have debit normal balance, liabilities have credit normal balance, equity has credit normal balance, revenues have credit normal balance, expenses have debit normal balance. A simple trick is whenever these are increasing, treat them with their normal balance and do the opposite when these are decreasing. So example, if an asset or expense is increasing, make it debit. If it is decreasing, make it credit. If a revenue or liability is increasing, make it credit, and when it is decreasing, make it debit. Congratulations on completing this lesson. Feel free to leave your questions in the comments. Please like the video and subscribe to support the channel. See you in the next video.